Hey traders, what's going on? Jamie Saettele here. It's the Midweek Strategy webinar. I'm actually making a recording right now to post because the actual webinar I did, I forgot to hit the record button. So I want to go through some of the topics that I covered. We actually started the webinar at 1 o'clock by looking at British pound US dollar. If you remember, we looked at this last night in the swing update and had kind of the inkling, if you will, that pound would end up trading up into 54.75.85 before falling apart into 53.30. So that's really, kind of the focus there on pound, and it's kind of one of the only things that, to be quite honest, I, have any comfort trading at this moment. Um, and that seems to be what's happened or what is happening. So the high today is 54.77, so it's right there in our resistance area, and we were pointed lower towards 53.30, 53.40, maybe a little above that region. If you get below there, something more serious on the downside could occur. But as you are watching this, or if you're watching this, depending on where it is, I would look for resistance in British pound around 54.40. Okay, and the weekly opening price was simply 54.37 or something like that. It's a good objective level to trade into. It's kind of where I'd be looking to trade pound. It's obviously a shorter term idea, could last a couple of hours, if not shorter than that. But yeah, 54.40 region, stops up above probably 55 to be safe, and would be looking for 53.30, if not just 53.50, okay, because then we could go higher from that point. We looked at, obviously, Euro CAD trade that we had on is no longer, and got a lot of questions in the webinar about that and the Canadian dollar in general. Look, when we look at the bigger picture, say a weekly chart, not much has changed as far as, this is a broader topping process or what have you, right? It's awfully rangy and whippy and whatever, but this kind of candle and these types of bearish engulfing deals typically are not seen, or I should say typically are seen at important tops, not just during some random period. So the risk to me is on the downside, still towards 142 or so over the next couple of weeks, months, what have you. And the setup that I'd be looking for now, or am looking for now, heading in tomorrow with ECB, is going to be looking at about 49.50, 49.55 to be specific as resistance. And that level is actually where you'd have two equal legs from the low on 10.7, okay, 49.55. You've also got slope up there. All right, it's the flatter slope that we were actually working with before. Probably should have stuck with it, but the potential on the downside for EuroCAD is significant and still is, so I wanted to get in that trade. So that's where I'd be looking tomorrow's 49.55. Look, there is potential for a move all the way up towards 51.70s and for old support to end up as resistance. I'll touch more on that tonight in the in the swing update, okay? So that's not out of the question. A complete stop run through everything, and then this thing really falls apart. That's not out of the question, okay? In fact, it's something that, given the markets we're in right now, you should probably almost expect. But 40, just complete setup, measured level, slope-wise, 49.55 is the level that you got to pay attention to for EuroCAD, okay? And of course, that brings us to the issue of ECB and Euro tomorrow. Euro is obviously something that you want to pay attention to as we go into tomorrow. And with Euro, we do have the analog that we're still following. And if you look at a weekly chart, right, you do have this nice wick on the upside last week. We had a reversal last Thursday that could keep Euro pressured for a little while, maybe even the next few weeks, maybe even all the way down towards 108 or below. And if that happens, you'd be near a 30-year trend line again, and that puts you on basically on par for higher levels thereafter. Okay, so ECB tomorrow, looking at a daily chart. Looking at a daily chart. Just doing, kind of a simple fib of the latest downswing. You've got basically 114 to 114.20 as your as your fib zone or retracement zone, 50% to 61.8%, and you've got the high from 1013 right at 1410. So that region 14 to 1420 is an area that I'd be watching for resistance in euro. Okay, look, I have no idea what's going to happen tomorrow with ECB, but I do know that a lot of times you end up with a false move, if you will, on ECB, okay, or any sort of Fed announcement for that matter, or central bank announcement. You get an initial move, unless it's a real bombshell, but you get an initial move, and that is digested, and then the market quickly retraces. So if that initial move is up into resistance in the 14, to 1420 region, something I think you want to look at selling. All right, and again, that could put us, depending on what dollar CAD does, could put us up near 49.55 in euro CAD. So let's look at dollar CAD now. Segue into dollar CAD. Dollar CAD. 2 equal legs from the low here puts you at 31.50. That happens to be weekly reversal resistance. Remember, weekly reversal resistance, just the close of the week that made the top, okay? And that is 31.50. So it's the exact same level. It's an area that I'd be looking for resistance. Much above there, and the idea of a larger dollar CAD topping process, at least trading it in the near term, is kind of out the window for me. So 31.50 is an area that I think is pretty important with respect to the integrity of what could be the bigger downtrend in dollar CAD. If that doesn't happen, if we don't fail up here, even a spike above intraday and a close back below would be a good sign. But if we don't start to roll over, around this region, then, kind of off this bandwagon for a period of time as far as dollar CADs on the downside is concerned. Okay, so pay attention there. Kiwi dollar. The big support, as mentioned, we've come off of decent resistance, right? And, we could see support in the 65.70s, minor support probably down here at 66.80s. The really big support, of course, is down in the 64.50 to 65 region. Okay, you've got all the volume stuff down there. You got former lows, former highs. You got a ton of stuff down there. You've got slope. This stuff is really all in play more or less starting next week. I mean, if things really fall apart the rest of the week, then you've got 64.50 in play Friday. But it really happens next week. And by the way, seasonality has turned bearish in Kiwi. My feelings on the broader picture, I think we have turned, but that doesn't mean we can't get a really deep pullback down into 64.50 or 65, which obviously from these levels would be quite a dip. Okay. And the way that I want to trade it right now is Kiwi yen. Okay. And we looked at this. This is in the swing update last night. We've got this really nice looking fork. Key reversal yesterday, outside day, pulling off sharply. First support, probably not for at least 78.60 or so. Okay, 200 pips on the downside from where we are right now. Would still be looking for resistance. You can go short term here and use a fork on Kiwi yen. And it seems to have a pretty decent, description, if you will, of price, and anywhere up here. So that 81.18 entry I still think is a pretty good one to look at. 81.18, 81.20, whatever. Looking to be short up here. Now, I will say that with Kiwi yen, if we go through 82, I would still be aware of resistance, although it's not downward sloping, but starting at the former lows from October 2014 up at 83.34, in line with this old median line, and this thing goes back 6 years, so it's pretty, significant. That's where we are with Kiwi. Okay, Kiwi, pretty clean short-term levels, and Kiwi dollar, Kiwi yen, starting to look quite bearish as well. So maybe Kiwi is in for, a rude awakening on the downside over the next few days. Plus, Euro pound, still like it on the downside, but on strength. And we looked at pound dollar, and I think pound dollar goes to 153.30 or so before it tries to turn up again, right? So that would put us with Euro pound potentially up at 74 plus before we turn over again there. Okay, if you just do a fib of the price action on Euro pound, you've got 73.98 to 74.20 as your resistance zone there. And again, on the long term, why do we look lower on Euro pound starting now? Because we've got this. We've got this trend line that goes back to 2013. It's very well defined. We smoked it right last week and then pulled off sharply, made a weekly key reversal. Larger support for what could be a broader bottoming process probably doesn't come in until at least 71.50 to 72 over the next several weeks or longer. Next several weeks to month, 2 to 4 weeks. So if we can get 74, 74.20 for resistance in Euro pound, you're giving yourself a pretty good reward to risk ratio and a pretty good setup, in my opinion. And again, this is something that may very well set up going into ECB tomorrow, right? Because if you get a spike higher and pound drifts lower and you get something of a spike higher in euro, you might find yourself up here again, your 74.20 before it falls apart. So I'd pay attention to Euro pound, one of the better setups in my opinion for the rest of this week. What else did we talk about? Oh, of course, dollar yen. Just keeping it real simple here. Sometimes the best thing to do is just sit and wait. So dollar yen, I think, we're waiting for this is the forecast, if you will, that we issued or was issued last week on dollar yen, and we are looking higher near term for resistance. I'd want to sell it probably near 120.80, 121, because that's slope resistance, right? But from here, we could kind of see a whole lot of things happen. We could pull back into 1890 or 1910 and rally from there, okay? So you could get a down move and then an up move. Okay, bottom line is dollar yen up near 121 is basically an important spot for resistance. Okay, so I'd pay attention to that price in dollar yen. What else did we look at? The S&P 500. Everyone wants to know when it's going to top, right? Well, it'll top once the last person freaking gives up on it. And I think that still probably could come, as mentioned yesterday, at 2045 or so, especially if it's on Thursday, right? Because wrote last night about the prospects of the ECB coming out and saying something, and markets are so drug fueled for more easing that every time you get a hint of something possibly happening, there seems to be a bid under the market. And it's come off today, and we're making an outside day, so maybe today is something of a top, but wouldn't completely dismiss the potential for the S&P 500 and global indices to pop higher right into resistance, near 2045 in the case of the SPX 500, and then sell off much more sharply. And amazingly, this has actually followed this this line, if you will, that was published some while ago. So we are actually getting to the point now over the next day where we would expect to see resistance and a much more important top put in place for the S&P 500. Remember, Friday's been the worst day of the week for the S&P 500 this year in 2015. Okay, so sets us up for a Thursday rip. Okay, coming off after ECB, and then just a complete tank job on Friday. Certainly a possibility. Obviously, if that happens, Kiwi yen should do pretty well on the downside. The DAX, going to want to pay attention to this, of course. We actually did hit resistance today in the DAX, didn't we? Okay, you can see that right there. See this line? Resistance, 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 resistance. Okay, so DAX has kind of entered resistance as well, and could really pull off hard from this level. Although I would actually be looking for support down in the DAX as well. Probably down near here though, starting 97, maybe 97.50. We'll look at this once it gets clear. All I can point out now is that it's kind of getting into resistance area, same level that was resistance on May 26th, and then throughout the end of June, June 23rd, June 25th, June 26th, had a huge down day on the 29th. So I'd watch the DAX in those levels. Gold, 1155, really important. Okay, it's the 824 close and ended up being resistance on the 24th of September, ended up being support on the 13th of October, and kind of need to hold that if we are going higher in gold. Failure below there really throws a dent into any near-term bullish prospects for gold, as well as probably commodities in general, Aussie, et cetera, et cetera. So would watch for 1155 support for tomorrow, really the rest of this week, I guess. And I think that pretty much covered it. We did kind of look at an interesting, so what you're looking at here is a monthly chart of the gold against crude oil ratio. Okay, and this ratio, if you think about it, it's kind of like Aussie CAD, right? And Aussie CAD is this, we've been looking at Aussie CAD for a long time. And I just don't want to forget about it because I think there's an awfully big move at some point in the making here, right? You've got market's coiled. It's getting ready. It's going to do something big. We're going to get a big move. Okay, this is just absolutely coiled. We could see resistance up at 96 if we continue a little higher. Just continue to follow it. If it starts to break down and we, get below 91, then you might want to just jump on board for a move down into 86 or 85. But the point is this, cyclical nature of the oil against or gold against oil ratio means that it trades in a big range, as you would expect with something that's cyclical. Okay, well, we just hit the highest just 2 months ago. We hit the highest on this range, the highest ratio that we've seen since October of 1988. That's a long time. Okay, if I overlay this with Aussie CAD, it's not perfect, of course, but you can see that there is a relationship. When there's a big decline, okay, in the gold, when gold against crude oil gets the top of its historical range on the ratio, you do get the tendency for a move in Aussie CAD too. So with Aussie CAD basically forming what might be some sort of massive head and shoulders top, and we have bearish slope on it, that resistance is up near 96, and we've got gold against oil at the top of its historical range, highest since 1988. Certainly the potential's there for some sort of a very significant decline to unfold at some point, from more or less current levels, right? 96 is not that far away in Aussie CAD. So just kind of point that out there, something to keep your eyes on, food for thought, if you will, for for Aussie CAD, maybe a trade that not many are looking at. Okay, so that's it as far as the webinar went. Again, sorry I forgot to hit the record button, but hopefully I think I covered more or less everything that I talked about there. Obviously didn't answer questions here because the questions, I can't remember all those, but that's it. So thanks a lot for watching and take care. Have a great rest of your week.